Hello. Good afternoon. It's Thursday, August 4. What time is it? 4:17 p.m. Welcome to episode 51, Awakening Bull. This is Mark Yu.
Wawi Santos.
And welcome to the Mark Yu and Wawi show. So this show is only for information purposes. Don't consider it as an investment advice. So we're going to go ahead and jump on our weekly sentiment. Right now, we're getting a little bit more bullish. Thus, our title for this episode. We take a look at weekly sentiments. So this was just published yesterday, fresh from the oven. The American Association of Individual Investors, they update weekly. So we're getting more into the bullish camp. So bullish meaning that the stock market will be at least up, or thinking that most of the investors are thinking that the stock market will be up in the coming months. So as of yesterday, 30.6% of those who were surveyed thinks that is to be occurred or soon to happen, compared to the bearish camp, which has been declining for the past month. So they're down to 38.9 from 46.5%. Looks like people are getting more bullish, Wowie.
Yeah, it's risk on again. So some people still call it a market rally,
Mm-hmm.
but I think there's a change in sentiment. We'll see how it goes.
Yeah, there's no telling. So bear market rally is like a bullish upside or uptick among the stocks, or the indexes, and this happens usually in a bear market. So that's the name, bear market rally. So bear market meaning overall the trend will still go down eventually. So but there's no telling. So we have to watch out. And as long as we're on a negative GDP watch, I think it's more advantageous to keep this in mind and not going all in each time there's a drop in stock prices. So fear and greed index. So we also take a closer look. So we're close to exiting. We just actually exited fear, right? We're at the neutral camp now. So we haven't been in neutral since the start of the year. So this is quite an indicator where people are getting definitely more into the bullish side. So right now in this gauge, we're still at neutral, but finally we're out of the fear gauge or fear sentiment. The market momentum as well. Look at this. Wow, with the S&P 500, we have touched the 125-day moving average again. So this just means that for the last 4 months, the index itself has been able to climb to its average on that level. So since late June, we have been seeing a rally in the S&P 500, which is a bullish sign, among other things. And the stock price breadth still, in a little bit bearish momentum. There's not much trading happening still, according to the McClellan Volume Summation Index. The options market also reveals a greed state. So we haven't seen this, Wowie, right? Most of the time, people are buying put options, and definitely lower sentiment or lower mood.
hmm Definitely, the past 3 weeks is showing signs of more risk on trading
Yes,
from the investors.
and this is despite the recent Federal Reserve 75 basis point hike. I don't think they're even done with that yet, right, Wowie? They haven't indicated that they're done hiking that amount or
If
even
things
more.
go positive, they might go for a 50 BPS uh, next month, but we'll see.
So yeah, for those who are unaware, the Federal Reserve hiking up rates is the main reason why we are seeing slowdown in overall economy, spending, interest rates climbing up, dampening of the housing market. They're trying to tighten the financial condition and slow down the red hot economy.
And I
And
think we're seeing some layoffs too, so it's taking some effect on the jobs market
right,
as well.
it started with the newly minted tech companies, and now it's spreading to major companies such as Amazon and Walmart. So Walmart came out with a press release yesterday that they're going to let go of at least 200 corporate jobs, meaning that they're going to, you know, maybe try to control their expenditures and salary expenses. So, yep, that's one of the reasons why we're experiencing some slowdown. Also, I think the Federal Reserve is aiming for an increase in unemployment. So that's quite dangerous. I'd rather have a job and work and be able to pay my bills rather than not work at all, because bills, expenses, mortgage, they never stop until until you
Until
paid
they
off
get
your
paid off.
house. Yeah. And mortgage usually are good for 15, 10 years, 30 years. So it takes quite a while, especially for those new home buyers. So the volatility index has been trending down since the rally late last month, or late last June. Actually, it's already August. So we haven't seen any sell off, frankly, in recent weeks. So that's a good sign. But keep an eye on the bear market rally, though, because if anything, if it's just a head fake, people will be crushed again, like yours truly.
Hmm.
So for the past
And
five,
and me as well. And me as well. This year.
yep, it's been terrible for technology investors,
Hmm.
the stock market. So for the hold on, my mouse pad, I don't want to get it wet with my Gatorade. So so for the volatility for the past 5 days, it actually went down even further, down 2.85%. And for the Nasdaq volatility, it's been relatively flat, so not much happening. Well, I would say probably it's just on a flat or higher for the Nasdaq for the past week. So for the past week, industries performance, the outperforming one is consumer cyclical at 5.47%. Technology is up 5.3%. Communication services is up 2.89. And the worst performer of the bunch is energy. It's down 3.65%. So for the past month, wow, technology is the number one performer for the past month. It's up 15%, followed by consumer cyclical at 12.79. Industrials, actually, each and every sector, wow, is up for the past month.
Hmm.
So I'm not saying there's a tide change right now, but definitely on the shadowing that bullish outlook that we are now witnessing. So just some screenshots here before we go to the fund flows. So S&P, this is a Bloomberg article that was just published this morning. S&P 500 executives haven't been this worried about the economy since 2020. So big, large US companies are worried about the economy. Are you worried about the economy?
Well, not as much as them probably, because they have to, they have to deal with with their investors. So,
Mm,
um, what I'm worried about is the unknown. What's the black swan that might occur again?
mhm.
Um, so people are just now settling down after the Russia-Ukraine war, and
Mind you, it's still ongoing though, but it's kind of like placed on the back of our heads at this time.
yeah, it's placed on the back burner.
Mhm.
Um, but it's still an ongoing thing. Um, Saudi Arabia has just said that they're gonna hold off on they're gonna keep their reserves, their oil reserves for the winter months,
Mhm.
fearing, seeing that Europe may need that in the winter time. So really, we're still not over that energy crisis until we see what winter is gonna entail.
Right. And guess who's back? Dr. Michael J. Burry tweeted this afternoon,
Hmm.
or just 5 minutes past lunchtime in his time. The silliness is back. After 1929, after 1968, after 2000, after 2008. the strain of silliness that transformed bulls into bubbles completely and utterly disappeared. But that
Mhm.
familiar COVID era silliness is not dead yet. Like 2001, before Enron, before 9/11, before WorldCom. So he's indicating here, he's not so much clear about this, but he's probably hinting that also he has been observing that the craziness or fondness of bullish investors thinking that the stock market will continuously go up has returned.
Mhm. Well, as you can see, that AMTD thing that happened in Hong Kong,
Mm-hmm.
right? So it's not just in the United States. So there's some craziness going on.
Right.
Um, so you just have to be watchful.
Mm-hmm.
Um,
AMTD has risen like thousands of percents, right? In a few weeks.
yeah, and like you said, it's like an AMC GME kind of move, kind of a move.
Right. For those
Yeah.
who have got into, at the ground level, I bet it's a good time to cash out right now. Because once this kind of like story hits the news, it's game over. The last, you know,
Mhm.
the last few people who would ride this train up to its peak are already probably in it. So the moment the
Mhm.
the whale starts selling, it's going to be no control to the downside, as we have already witnessed with some of the stocks.
It's just like a flash fire, or in the Philippines we call it ningas kugon. It's just like it's gone.
Yep. Poof. Well, we're gonna see how long it'll take, though. We're not saying that it might collapse tomorrow or not, but it's a
Mhm.
definitely a highly indicative warning. Before we go to the fund flows, well, the fund flows, according to Reuters, published over the weekend, says global equity funds record fifth weekly outflow in a row. So despite people getting more bullish, the thing that they've been doing behind the scenes that they've been actually just selling relentlessly. So people are still wary about the stock market leaving their money in there invested, which is interesting. So, like what Maui has just said, the mass layoffs have been surfacing and greatly affecting the tech workers specifically. And now we're seeing a huge confidence in these tech workers in keeping their current jobs. Junk bond market, last snippet that we have. Junk bond market is signaling the US will avoid a recession. Spreads are close to median for non-recession. So it's kind of technical here, but what I would just like to highlight is like junk bonds. People who trade these assets are usually the smartest guy in the room, I believe, in my opinion. This is because they they move billions and billions of money, controlling the future of these companies, ranging from oil, tech companies, and stuff. So if they're indicating that we're not going to have a recession, or we will be able to avoid a recession, which actually I think while I really sincerely think that we actually went through a dip or a brief recession in the first half of this year. If junk,
I would have to agree with that.
yeah,
For me, it was a recession.
yeah, if junk bonds or junk bond market, the smartest guy in the room thinks that there won't be any, making their money talk for them, explaining their thoughts on the market. I think it's probably safe to assume that we're not going to see any very uh, trembling or very scary outcome on the stock market in the coming months, at least. So we're just going to take a look at the fund flows. So fifth weekly outflow. It says here, according to Refinitiv Lipper, global equity funds book net selling of 2.73 billion, east to the lowest in 5 weeks. So despite the sell-off for the past 5 weeks, 2.73 billion is the least outflow that had occurred. So there's not much explaining to do. Everything, including European and Asian equity funds, experience outflows. Much more in European, they experienced 2.58 billion outflow, and about a little more than $500 million in Asia equity. US, wow, interestingly, while US equity drew a net 0.63 million, like $600,000 in inflows. So not so much conviction there.
Mhm.
So, yep, we're going to jump on to the next. This is jobless claims report that just came out 5 hours ago, published by the Financial Times. It says US jobless claims hit 6-month high as labor demand cools. Layoffs have hit technology, retail, and crypto businesses. So now it's definitely surfacing and showing in the data that the Federal Reserve considers before adding more rate hikes down the road. So jobless claims have been increasing, and now at its highest in the past 6 months. You think this is further upside, Wawi, or are we seeing like a peak at this point in time?
There's that's hard to tell, but just all I know is that the Fed rate hike is already taking effect since it's leading to to job loss. So
Mm,
that's one factor that they're looking at. I think for to evaluate how that rate hike is affecting the economy. So it's
right.
going in the right direction from what I'm seeing. As potential job losses, yeah. If you just look at the earnings, they're not so hot, right? So yeah, you should expect you know, some more layoffs here,
Mm,
um, incoming in the
yeah.
near term. Yep.
It's sad to lose a job, definitely. And I hope these guys who lost jobs will be able to find some sort of job stability later on. But yeah, this is one of the Federal Reserve's target to have more jobless individuals to tame down the wild fire that is called inflation nowadays. So the jobless claims actually far exceeded expectations by about 1,000, and economists think, or at least expect, that the unemployment rate is at 3.6% steady.
Mhm.
And this will be reported tomorrow, actually. So we're gonna find out by tomorrow. But yeah, Federal Reserve itself, I think they're shooting for more than 4% or 5% just to tame down the inflation. Oh, speaking of, so I was able to take a clip from Financial Times about the AMTD mania. 14,000% surge. Oh my. So I guess there were rumors that it is linked to one of Hong Kong's or China's richest man in real estate, Li Ka-shing. So he himself disavows the AMTD. Hong Kong tycoon Li Ka-shing of CK Hutchison Holdings has distanced itself from AMTD Digital after meme stocks value surged more than $200 billion since listing in July. So definitely there's no connection between them and, oh, it already has plunged, I guess, Wowie. So it shot up to $2,500 a share. Now it's back down to about 1,000. So that's already a $1,500 loss, or wow,
Yeah, that's a done
and
deal right
yeah,
there.
quite a collapse from the peak. So it is interesting, but yep, better stay away from it if you don't want to get burned.
Mhm. Don't
So
base your investment on rumors.
yep. So now we are gaining some momentum into earnings. So we have reported since a couple of weeks ago, it all started with the banks, and then Netflix came out with a dud, but still market appreciated the performance, the stability of its business, despite the decreasing amount of subscribers. And then we jumped on Walmart and Amazon. Walmart surprised us with an amazing build in inventory, 40 billion, I think,
Mm.
worth.
Hmm.
Amazon came out with a somewhat good earnings, definitely losing a lot in international business. But yeah, still their Amazon Web Services have been delivering, helping them reach some sort of stability, but regardless, they lost $2 billion if I remember that correctly. And also, I think Huawei they registered a big loss in their investment in Rivian. So if you just eliminate Rivian, they probably still be profitable, um,
Mhm.
except for that part. And we take a look at Meta. Now we're taking a look at some what do you call this? Side gig jobs, side gig rock, gig economy, right? Huawei.
Mhm.
So we're gonna
Yep.
take a look at Lyft and DoorDash. So Lyft actually posted the record. It's profitable earnings. Posts a record earnings. I think that this is their adjustable EBITDA, adjusted earnings hit $79 million in the second quarter. So this suggests that the company is able to deliver to its promise. The Wall Street or Bloomberg estimates only for it to deliver $18 million, but it registered $79 million, while its sales increased by 30% since last year. This is quite impressive because last year was the reopening play when lockdowns have finally eased and people started heading back to the streets and do about their business. So Lyft is showing some strength. And compared to Uber, Lyft is mostly a play in the US. So it means in this second quarter that just ended, Lyft is doing more business, meaning if anything, they would be the ones suffering if people are, slowing down their spending because of tighter budget and stuff. But regardless, they're making profit at least and their adjusted earnings, right, Wawi?
Probably a lot more travelers too at this
Ah,
point.
true, true.
I noticed a lot of airlines are selling tickets for very low prices, like $100 round trip from Dallas to New York,
Really
$100 from Dallas to Seattle. So I think it's a like a marketing ploy to get people to travel again.
could be,
So
or
it could be
it could be also a slowdown that they're not receiving a lot of demand and therefore they had to lower down the
they're they're
prices.
they're pushing it.
Mm-hmm. Well, interesting for Lyft though.
How about
Um,
Uber? How is Uber doing?
Uber,
Uber is
I think Uber actually rallied when they came out with their earnings previously.
yes. Yeah, that's what I thought too. So both of them are doing good. Uber
Yep,
is up 5.5% today.
perfect. So these two in tandem. Lyft is actually up 1.78% after hours. It's up 4% for the day. So they're gaining some momentum. So yeah, according to Seeking Alpha, Lyft top expectation aided by recovery and active drivers. So I think yeah, we've been discussing the shortage in drivers too, right, Wawi? I think now
Hmm.
they're experiencing less difficulty in getting these drivers.
Airbnb is also up today, uh,
Mhm.
trending up.
The
So there you go.
gig economy. Airbnb came out with their earnings, I think, previously. So
Hmm.
next company I see here is DoorDash. So DoorDash also beat
Mm.
estimates, resilient delivery demand. So despite no lockdowns, DoorDash registered 30% increase in their revenue, which is impressive.
Wow.
One would think that, people would start driving onto, well, maybe because of the higher oil price, but still,
Yeah.
it's if you weigh it, it's one way or the other, you'll still expend a good amount paying DoorDash tips and expenses if you do a DoorDash delivery than buying yourself a meal outside. So orders jumped 23% to a new record for DoorDash, 426 million. Wow,
Amazing.
this company just in the second quarter delivered 1.6 billion in revenue. So it's not a small company anymore, for sure.
Hmm.
According to Vice President Ravi Inokonda, our results speak to the strength in our business and resilience in our platform. Customers placed 426 million orders in 3 months, ending in June, jumping 23%. Wow. Good results for DoorDash, looks like.
Demand for services is
Services, yeah.
yep, is increasing.
So unlike its gig economy peers, including Uber, Lyft, Instacart, DoorDash has said it's not considering layoffs and has no plans to slow hiring. So DoorDash is a strong survivor
That's a good sign.
despite high inflation. Yep. So DoorDash, they actually miss earnings estimates, but they beat revenue estimates by Wall Street. So how's DoorDash performing after hours? Let me see here. DoorDash is, oh, that's not DoorDash. I
Yeah, it
think,
went up. Yeah, it's at the close it was at 81.36, and after hours it's at $93.46.
wow, it's up nearly 15%. Oh my.
Exact.
Wall Street
We're,
loves the results.
yeah, so yeah, Wall Street will reward these these earnings report if it's positive or at least within
Mhm.
estimates.
Yep. And next will be Alibaba. So Alibaba came out with a report today, this morning. Alibaba sales better than fear despite economic turmoil. Revenue barely changed, but that exceeded lowered expectations. So I guess Alibaba is up today. How did it perform?
But almost 2% up, 1.79% increase.
Mhm.
Now pegged at $97.43.
So it's
Went
still
up a
less than
dollar.
100.
Still less than 100. Yeah, I think I got Alibaba at 100.
Mhm. So
So
China's, uh-huh.
may need to tap into it a little bit more.
Yeah, China's e-commerce leader reported $30.4 billion in June quarter, enough to beat expectations. Profit fell 50% though. So
I don't
it's,
know if that has anything to do with the ant thing, where I think they're trying to separate ant from Alibaba, that
yeah,
financial portion of Alibaba.
right. Well, I think it's because that, and also its profitability of that business too had fallen 70% after its setback in regulatory stuff. Nonetheless, it says here, according to its CEO, Daniel Zhang, starting in July, we are seeing a gradual recovery of business performance compared to June, especially in the relatively more impacted categories in the past few months, such as fashion and electronics. So probably we're gonna see some bounce in the coming in a year, at least in the next quarter, at least.
Mhm.
So
That's the expectation.
mhm. Alibaba. I
Mhm.
think it's good to have Alibaba, at least some exposure. It's the largest Chinese e-commerce. But the thing is, Huawei, they came out recently that it has been added to the possible delisting from the
Mhm.
stock exchanges here in the US. So that's quite an issue right now. Hopefully they could address
Mhm.
that because I think they would like to
Mhm.
do everything they can not to be delisted. Of course, they're gonna lose a lot of capital access if they do.
Mhm.
According to this Seeking Alpha article published on August 1st, Monday, Chinese tech up Alibaba to strive to avoid NYSE delisting. So there's the
Mhm.
company's what do you call that? Uh, there's the company's stand in terms of being delisted or not delisted. Unlike Didi, they just accepted whatever their fate was.
Mhm. Well, is Alibaba listing in Hong Kong at this time? I know they're trying to get into the Hong Kong market.
Mhm.
Are they listed in the Hong Kong market now, or do we know?
I think they're trying to get listed over there, but they haven't been.
Hmm.
They have submitted
Okay.
their application. Mhm. I want to see their balance sheet though. How steady or stable their balance sheet is, just in case things get sour over there in Asia.
Mhm.
Hey.
Right now, Asian market is ticking up. It's on the uptrend, and Europe as well. I guess on the news that some countries in Europe had increased their interest rates too.
Yes, I think Bank of England hiked 50 basis points. It was more than expected. They're definitely looking to tame down inflation. So I can see here Alibaba has 26.4 or $26.39 billion in cash plus short-term investments. So that would be 0.39, 41.28, well, $68 billion in cash, while they have, well, I can't see their liabilities. Bank borrowings have about 21 billion in debt. Man, this company can survive for sure. They have a lot of
Mhm.
cash on hand and lots of equity to weather down any storm. Alrighty.
That's good.
Well, I guess that's it for today's episode. Do you have any quote for the week?
No, just stay resilient and stay um, invested in the stock market.
Guys, I would like to second that. Keep invested. Don't sell on panic, like,
Mm-hmm.
because that would solidify your loss. Unless you want a tax harvest, so that's another topic to discuss. But yep.
Mm-hmm.
Listeners, that does it for this episode of Marky and Wowie Show. Thank you for following and listening. Send us an email at markywowieshow@gmail.com if you have any questions. All right. Well, we're going to sign off for now. This is Mark Yu signing out.
Wabi Santos signing out.